So especially with the incredible second quarter earnings that got published since the last video on Nokia's stock, there has been a ton of insane stuff happening again. And next to skyrocketing to well over $6, we are also up more than 5% since last time, equaling an astonishing gain of more than 60% since the lows from the crazy few 100% gaps at the beginning of the year that happened due to some massive short squeeze attempts by retail traders. But as there is some huge news regarding the released earnings as well, what we are going to do today is give you an updated insight into what is happening to Nokia's stock and break down exactly whether it is still a buy at the end of this video. And as the analysis in the next few minutes is absolutely crucial to consider before buying the stock, make sure to stay tuned. Really quick before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button, it's free, and you can always unsubscribe if you feel so. Alright, let's start with the certainly biggest story, the new earnings report. And there is actually a ton of insane growth we have to talk about here, starting up with another almost 10% increase in net sales year over year in literally every business sector, particularly in the network infrastructure, which we'll also take a quick look at later on. In fact, even if we exclude a major one-time software deal, we also saw remarkable progress in operating margins. But what is even more incredible is the estimated growth for the full year that results out of those fantastic numbers. And we're talking about a raise of almost $1.2 billion, now expecting to generate an incredible $26.8 billion over the full year of 2021. So it's definitely sure to say that the company has rapidly accelerated as its products and execution have greatly improved under its new CEO. But in regard to their actual business, it's crucial to know that there are a ton of things that have changed over the years, also being heavily emphasized in Nokia's earnings report. And here we definitely have to start with the new 5G and network infrastructure business, which seems extremely appealing, especially after the more than double-digit growth in the second quarter, massively impacting the company's financials. But the absolute highlight of the second quarter, at least that's what Nokia boldly claims, are the new cutting-edge AirCycle baseband and radio products of the company, rocking an insane 75% better power efficiency in order to substantially reduce the company's environmental footprint, as well as the literally lightest multiple input multiple output antennas ever. Nonetheless, the 5G and network expert has been plagued by problems in recent months. For example, it missed out on a $6.6 billion deal with Verizon Communications to sell 5G equipment to Samsung in September. And despite the fact that the US telecom service provider is still an important customer for Nokia, the event highlighted the company's declining competitiveness as a result of acquisition integration and innovation issues. So the question is whether Nokia can stay afloat in a market that is becoming increasingly competitive. However, management's anticipations by the end of the year are looking extremely good as we've just talked about. Nevertheless, we are continuing to see some big market uncertainties in countries like China, still bringing in almost $400 million in the second quarter though. But in order to reclaim its position at the top, Nokia created a radically game-changing approach known internally as the Great Reset. So let's take a deeper look at this and what it implies for Nokia and its stock, because it's literally crucial for the prediction at the end. And, as previously said, the company actually plans to cut its workforce by up to 10,000 individuals over the next 18 to 24 months, starting with the current 90,000 they have right now. But by the end of the restructuring, Nokia expects to save more than $700 million a year, despite the savings not being expected to get used to boost the company's bottom line. Nokia will instead concentrate its efforts on R&D and infrastructure. It'll all be about 5G networking and digital infrastructure from now on, so that in the end, the costs of restructuring should be almost equivalent to the cost savings. As a result, management expects operating margins to increase by around 10% this year, rising to a range of up to 13% by 2023. So Nokia certainly has some huge growth ahead, making it a buy right now for many people. Alright, if you like this video and want to support our mission of providing free financial information here on YouTube, please ensure you're subscribed and definitely consider leaving a like. Thanks a lot and see you next time.